So we finished the week on a little bit of a down note, but it was still ended up being a really, really good week. Following up on last week's, not as good as last week. There's, the rotation wasn't as good. We'll talk about that. There were some things that, there are some red flags that are popping up. Nothing too major, nothing imminent. So I don't think necessarily we're gonna falter next week. Obviously, we could, and I will talk about what to watch for. But other than that, it wasn't the greatest upward, but it was bullish, and we're continuing higher. And I think we still have continued potential to move higher. And I'll talk about why, what charts I'm looking at, what patterns I'm looking at, and what I'm expecting because of it. It is free Friday, so you do get access to the full version of the video today, whereas on the other days you only get access to the previews. This will give you a taste of what this is like. Again, if you want the full version of the Market Outlook video, you can sign up with us at marketscholars.com. All of our subscribers get access to it, starting with our foundation tier, which also includes the trade idea that I'll do at the end of the video that we do at the end of every Market Outlook video. So let's go ahead and get started. Today is Friday, August the 15th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, if you're watching us on YouTube, make sure you subscribe to our YouTube channel with this icon down here or the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at marketscholars.com. Our basic subscription is for free. You get access to our daily Market Outlook blog posts. You can read up on everything that happens. Pretty detailed on what's going on from an asset class standpoint, in their market, sector rotation, technical analysis standpoint. So make sure you subscribe again for free. You obviously, to watch this video, you do have to access or subscribe to our site at different tiers. Starting with our foundation tier, but you get the blog post for free with our basic subscription. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're here on our website at marketscholars.com, if you hit Market Outlook and go to the Market Outlook video archives, you can see all of our videos here. For example, if you click on one of these, it takes you to the post. Again, you have to be a basic subscriber, which you can do for free right there. Or if you're just on our website up here at the top, you can subscribe for free. That takes you to our basic subscription. Just join there, log in with a username and your own password, sign up. That gets you access to all of our Market Outlook videos that see here. For an example, here's what one looks like there. You get all the details on what's going on, relevant macro factors, technical outlook, intermarket relationships, sector rotation, as well as kind of a overview of what's going on today. Again, that comes with this. If you want to watch the full version of the video, then subscribe to our foundation tier. So that is right there, upgrade to foundation tier right below that video. It takes you here. You can also get to it under pricing with Market Outlook Foundation. And again, you get 2 months for free if you sign up for a yearly version, or $29 a month if you do the monthly. And just sign up there. Any questions you have, just come down here to the bottom right. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we fell today, another down day, but again, hardly, like less than 1/3%, not very much, and still ended up the week pretty strongly higher going into options expiration. The intermediate line remains in the upper reversal zone, and now we do have a bullish intermediate confirmation signal. The near-term line's below 60. But it didn't cross any other line. The momentum line is below it and actually oversold. And one of its more oversold levels than we had last time we were this oversold was over here. And we rebounded, and the near-term line came a little bit lower, and then that started, that post-expiration rally coming out of July. So pretty oversold levels, again, similar even over here and a couple over here, but not extremely, right? It's when we get below 5 and the near-term line's down. So we might have like one more little down day on Monday, probably little down day to get the near-term line into bearish territory. And you probably have the momentum line bounce out of it, but still probably remain in bearish territory itself. But that's kind of what I would expect. I don't expect that, this isn't the start, I don't think. This is the start of any kind of decline in the S&P 500. In fact, I think there's a good chance, again, that we bounce out of this and continue this move up to the upside. Again, maybe one more down day, right? Again, if it is, it'll be like another one of these, right? Down 1/3% and nothing really more than that. The NASDAQ 100 looks very similar. It crossed 60 and 50, so multiple lines. The momentum line is oversold, but again, a bullish intermediate confirmation signal. So an opportunity to bounce right out of this, right? And the fact that the near-term line is actually below 50 means there's a pretty good chance that we bounce out of this. Again, nothing's 100%, but the probabilities are higher that we'll get a nice little rally here. The Dow Jones hit a new intraday high today, so we got finally a new intraday high point. We did end up closing down. You can see the intermediate line still rising, the near-term line was down, the momentum line was down, so no intermediate confirmation signal here. But still in bearish territory, and your near-term line still above the intermediate line, even though they're both below, between the reversal zones. Remember, any kind of crossover between the reversal zones is either bullish or bearish. So that's something to keep an eye on. We just had we're dark green shading in the green line for just the past few days. So it's kind of new. The market sentiment's falling. It's almost below 80, but still in the upper reversal zone itself. The intermediate line is below market sentiment. That matters no matter where those two lines are. And so we're still recovering from the bull tags that we got. I mean, this was clearly more of a bull tag than what we saw on the S&P, where we never did get an actual bull tag. And then finally, your Russell 2000. The intermediate line now is crossed back above the market sentiment, which is what we'd expect out of the Dow. You have dark green shading. You have the momentum line oversold, but not too extreme. The near-term line's down, but not, it's oversold levels. So there's an opportunity again for this is a bullish intermediate confirmation signal. We talk about this a lot because the trend's so strongly bullish. The intermediate trend is so strongly bullish at any time the momentum line dips to oversold levels, it's a buy the dip signal. And you can see more often than not, they've played out over the length of time, even if it's not necessarily, again, on Monday, but, probably on Tuesday, depending upon how much more the market would have to go down. So we're still easily above the 30-day moving average. So it's still green. We still have dark green shading. So everything's fine from that perspective. There's no sign of weakness yet. Even with, a 2-day drop in the Russell, there's still really no sign of weakness here. In fact, it's actually an opportunity. Like I said, it's actually a bullish pattern that buy the dip signal. Let's go back and take a look, since this is a weekly, the end of the week. Let's take a look at the weekly chart. We did not finish with an overbought cluster, but came pretty close. A near-term line bouncing back up above the 80th percentile. So now you have both the intermediate and near-term line above 80 again. So you can see you can have multiple weeks of that whenever you do get it. So that's a good sign for the markets. The momentum line is down this week, but at least it's in the upper reversal zone. The Russell, remember, has been a little different, but it's finally now dark green shading in a green line. Its intermediate line is back into the upper reversal zone. Your near-term line has crossed above 40 and 60. Now, the momentum line is not above it, so that's a little bit of a concern with the Russell, especially and mainly because of where we closed with that upper shadow. If we had we closed at the upper shadow, if I were to correct this bar and change the close to the high of the week, so you can see we would have had the momentum line up above. In fact, we'd have been really close to a overbought cluster. That didn't happen, so we're not nearly as, but still pretty bullish. Still bouncing back out of bearish territory. Your Dow Jones Industrial Average, remember, it's also a little different here too, and it got the new high. Its near-term line bouncing, momentum is not above it, but still, intermediate posture strongly bullish on the weekly chart. So everything still looks pretty positive from a market forecast perspective, both on the weekly and the daily charts. All right, now let's take a look at the other weekly chart. So we like to look at here, and first the Heikin-Ashi candle, again looking really strong. About 28 points above the close at 64.49. Heikin-Ashi close at 64.21. So that's bullish. That leads us to the potential for a bullish candle next week. At least starting off the week with a bullish candle next week, where your PPO is well above 5%. That's really good. That's that's a mature trend when you get to that level. So really, really good opportunity there. Like, this might have been the weakness. You usually get a weakness when you get around the 5% mark and then you take off. This might have been the weakness here that we've had. So a good opportunity there. You can see from the whole perspective. Let's look at the weekly chart on the whole. Again, you can see like where the parabolic stars are getting closer, but the PPO here, this is relative to the 200-day haul, is still rising, still above its moving average. Hasn't cleared 5% yet itself, so that's an important level for it to clear. So we'll see if that ends up happening. We've been converging on the size of the candle here for so long, but we're above a rising 200 week haul. The 20-week haul is still rising, even though we've been kind of a little bit below it, but now looking like we're getting back up above it. So we'll keep our eyes really like, if we are going to turn lower for any kind of like, weakness here, it's going to be like, in the next, probably not next week, but, sooner rather than later. Otherwise, I think the more likely scenario is we probably get another like run like this, where we get another run higher for a while, and we just kind of stay bullish, like something like this as well. We just kind of stay bullish for a while until we finally get our pullback. And that's kind of what my expectations are here for the haul. Let's take a look at the 3 green arrow chart. Obviously, we have 3 green arrows still, and the MACD histogram is dropping on all but the Dow. Everything else is dropping, but we're still green, so we're still okay there. We're still easily above moving averages. When you look at here, we're above the 8-day. The MACD is still above its moving average, that's why the histogram is green. Stochastics is still bullish, the stochastics is still, we're still easily in the upper reversal zone. We're not above the 90th percentile anymore, but we are still easily above the reversal zone in terms of where we are inside the 4-week range. If I take a look at some of these other oscillators, the DMI still looks very positive, above 30, below 20, so very positive there. If I take a look at the RSI, we're above 60 on the RSI. We are above 100 on the CCI, so still at bullish levels on both of those indicators. If you take a look at the Ichimoku cloud and the trend strength indicator, still very mature. We cross above 15, which is not common, but when we do, we can get be bullish for a while. The weekly is looking real like it's just barely crossed this week into mature bullish levels. So that's a very, very good opportunity for the continuation of a new trend. Like when you get above to mature levels, we can be mature for quite a while. So we might get squeezed out a few more weeks out of this. And then finally, look at the Bollinger Bands. We are, we're not above the upper band anymore. The bandwidth is low, but it's rising, and we are trading in the upper quartile of the bandwidth. You can see the momentum is rising with those green dots. You can see the bands outside the Keltner channels, and we opened outside the Keltner channel today, but ended up closing, but still easily in the upper quartile of the bandwidth. So still very bullish there. A new high. We did not get a new high. We came close at the open to get a new high. Didn't quite get that. Still kind of an still have an intraday move here, and then like an inside day, excuse me. It's saying a couple of days in a row now with inside days. And then you look at the range and the 68 million shares on the range, still 3.5 points, similar to what we had yesterday. So the ATR is still pretty low. It's below 1%, but not extremely low yet. It's not below that 0.8% again. It did get there, and that's what prompted that drop in 3 out of 4 or 4 out of 5 down days, and the big drop that we had there. So we don't want to be too extremely low, and we're starting to move a little bit more towards that end. You can see when you get back below this 8.8%, with the ATR just getting so low there. So that's a little bit extreme, so that's something to keep an eye on. And then the other thing to keep an eye on too, in terms of red flags, is how extremely low we are relative to the VIX 3M, the VIX, and then how this big correlation drop. That's the biggest correlation drop that we've had here for a while, right? I had to go all the way back to last June, and then of course we had the big spike higher in volatility. So that's a little bit of a red flag with the VVIX, with the VIX so low, flirting with 15, and at flirting with 0.8% relative to the VIX 3M, but still the VVIX is still pretty high, a lot closer to 100 than it is to 90. And usually when these two are at these low levels, we are below 90 on that. So hence the correlation moving like it is. And usually when the correlation's down, that usually prompts a jump in volatility, because again, the VVIX generally leads the VIX higher. You can see the VVIX has been higher coming off that low. There was a little bit of a pop there on August the 1st, but then the VIX has just come, the VIX has come way down, but the VVIX hasn't. It's still, pretty relatively elevated even though we're at the same levels we were back here when the VVIX was not elevated, and that's why our correlation is dropping, and the VVIX suggesting, a little bit of a red flag there that, there might be some volatility. So I don't think there will be, but we do have to, be aware of these signs that are increasing the odds. I think they're still lower odds, but they're still, they're higher than 0%. Because of these small red flags that are popping up. Nothing more than that. All right, now let's talk about what's driving this price action. Let's take a look at the asset class comparison chart today. Go just to today first, and then we'll go for the full week. Again, international equities, developed especially, did well today. Real estate, which is interesting, with the yields rising, real estate still did okay. Emerging markets, whereas all the U.S. equity asset classes were all down. Weakness in the dollar helped with that, pushing those stocks up. Usually weakness in the dollar helps push the S&P up too, so that's a little bit of a difference. And then again, you can see commodities were down, the dollar was down, but then that third head of the monster, bond yields continued higher. So bonds were the worst performer in this class. If I zoom out to the beginning of the week, you can see gold and bonds and the dollar, all safety trades, all down, and everything else doing pretty well. IWM ended up with a 3% gain by the time it was all done, at 1.5% gain for the week, but ended up with a 3% gain. Developed markets up 2% this week. The S&P up 1%. Qs were down. Qs were underperformed, significantly underperformed IWM this week. So that's only 1 week, so it doesn't necessarily change too much there. Let's take a look at the charts for like the 10-year yield. Remember, it went up yesterday quite a bit, and so it goes up another 3.5 basis points today. So that's a kind of an interesting pattern there. But then on the other hand, your dollar fell down again today, so it's down back below these moving averages. If I were to look at the weekly chart for this, you can see long upper shadow, and here, let's look at the UUP, because the dollar index has some kind of weirdness. There you go. So back below, on the weekly chart, back below its 8-week moving average. The 10-year yield on its weekly chart has been really flat, but it's back up above its 50-week moving average. So everything is kind of down, but it's pointed higher there. So, but if you look at, earlier today in our portfolio management class, I dove into this a little bit more, but let's take a look here at how developed markets are, how the international markets are doing on a rotation graph basis. So let's come over here, and actually we're over here. On this one, you can see, let's go to SPY, ACWI as the benchmark. And then we'll add on SPY and EFA and EM. All right. So here's how the major asset classes have been doing. Remember, there's on a weekly chart. There's a time earlier in the year, especially when we started to falter here in January into March. You can see during most of this. Let's see here. Let's go out to I'm going to zoom out. You can actually see that decline. So here we are right there. So here we are going into January, S&P 500 outperformed. Then as we started to roll over and have this correction, you can see international stocks did really well. And a lot of people saying, oh, look at the international stocks doing very well. It's only because the dollar was, the S&P was underperforming, right? We were dropping there. Then as we start to bounce, you can see the international equities started to underperform. The dollar started to rally on a relative basis compared to everything else. And so that's where we're at right now. The S&P is still working its way up to the right, and international equities, especially developed markets, moving down to the left. And there hasn't been a significant increase yet in those yields or in the relative strength. If you take a look at, let's look at this one, and you can see there's the relative strength bars down there. Let's pull up SPY and look at that relative to ACWI. And we'll pull ACWI over here as well. So there's SPY, well above its 8 and 17-day moving averages. You can see, the daily charts showing some weakness here, but let's look at the weekly version. Oops, let's go a little bit further out. And you can see here that the relative strength is just starting to recover from some significant underperformance because of this downturn, and now it's still recovering back up. Momentum is still pretty strong. It's actually pretty high momentum there. But you can see even if it rolls over, you can still be trending higher, and that's that wasn't the case over here or over here because the relative strength is so high. Right now, the relative strength is not so high. So I think there's an opportunity for us to continue, like we did over here, to continue to move higher off of this low point as the momentum just kind of wanes. So it'll be a lot slower, but we'll start to move our way into that upper right quadrant for SPY and be bullish again, just like we were previously, right? When we were coming off this October low point in 2023, you can see SPY just stayed bullish, in between the green and yellow boxes for most of that period. And then we faltered over. And international equity stayed over there between red and blue for most of that period, as we rallied. And that's typical, right? That's typical during, especially with the market cap, difference that you have in the S&P relative to these international areas. Let's take a look at the breadth today. So the breadth, still relatively poor. We didn't get a nice trade. In fact, we went negative there. So that's not necessarily what we want to see. It's not that bad of an issue, though. I don't think it's that big of a problem. But we did have the number of stocks above the 50-day drop back below 300. So that's a significant drop back down. The number of new highs was only 65. So we had a big drop from the 200 level that we had earlier in this week. The net new highs and lows, you can see we're still around 100, so we're still okay there when you look at the NASDAQ. The bullish percent index staying below its average. The number of stocks above their 200-day moving average, close to its average. So breadth's looking really poor. Even the sentiment this week on the AAII really dropped down to negative levels again. So again, little red flags, right? Little red flag on this that usually kind of precedes some weakness there. And we'll see if that actually does turn into some weakness, or if this turns into a slow grinding move, a convergent type move up to the upside. So this, again, red flags to be aware of. I don't think that we'll have an issue next week. I think we'll still be bullish, but we do need to be aware of again, any time that we get any kind of downward turn here, breaking below the 17, breaking below multiple moving averages, and any time, so that's what we'll be keeping our eyes on, or any time that we get the momentum and near-term lines dropping to lower levels, right, to extremely lower levels. So not the case yet, and still looking like I buy the dip, and things looking good, but we'll see how things turn out throughout next week and into the next following weeks, while we still are in this kind of period of time where the S&P doesn't really go down. It just kind of goes slightly upwards to flat. And then it's in late September, early October is generally when we get, the period of weakness. And that's probably when we'll get our 5% zigzag, right? Our 5% decline on the zigzag chart, which is, we're due one. Doesn't mean, it has to happen tomorrow, but, at some point in time, we'll get a 5% tag. It will stop around here, and then we'll get a green tag with double-digit returns after that. All right. Finally, let's take a look at the sector moves. Let's take a look at our sector comparison chart. Again, you can see XLK doing very well, and that's what we want to see. Here's how we did today. Again, with the markets down a little bit, XLK was a loser. And financials, too, industrials, those have been relative winners at some point in time this year. So not necessarily the greatest. Healthcare rebounded thanks to UNH. Real estate, again, kind of weird that it's doing well with the rise in the yields. Let's go back to the week. And real estate had been so poor, maybe one reason why it bounced up today, kind of an oversold technical bounce. Staples and utilities still down on the week. Technology being down on the week. So that's kind of an interesting development. So, it's interesting to see that the breadth really dropped off at the end of the week, but you still had, multiple sectors, including XLC and XLY, but financials and materials and healthcare and energy for most of the week all outperforming the market. Energy just barely lagged the market there at the end. But that's not typical of a market that's losing breadth, right? So, but again, that's also not the what we want to see. Like last week when we were pretty bullish, you go here to last week, if you recall. That technology and communication services were the only outperformers. We're pretty narrow, and that's what we want to see. Staples was kind of an odd move up there, but obviously that's not the case this week, and we'll see how things if XLK can recover, because that will be kind of a an early warning sign that things might be not moving in the direction that we want. Is when we start to see some weakness and softness in the biggest and most important sector that we have, right? If you start to break that 17-day and breaking the 50-day on the ratio chart, and the relative strength finally breaks that 100 after being above it for so many weeks and months now. All right, so that brings us to our trade idea of the day, and you can see we're going to take a look at First Solar, which really broke out in a big way, breaking above all these recent highs, breaking above that recent high back on that May breakout, breaking above a couple of these bear tags from earlier in the year and late last year. So really good move after getting kind of a bull tag type pattern. The last bull tag pattern we actually did get had a good run. So there's an opportunity here to make it pretty good, like the near-term line crossed above 40, also slightly above 50. The momentum line was up above. It was actually above 80 when we were near the highs of the day. So really good opportunity here for First Solar to make a run. It started a trending move. You can see we just barely got a golden cross, got a really good bullish candle. It's going to be a much bigger bullish candle because we're 199. We're well above the Hakinyashi close. So you're going to get a really good sized candle here next week to start off the week at least. We obviously have 3 green arrows after having 2 reds. We got 3 greens with a good jump in volume here today. The moving average already being green. If I take a look at, let's see here, the 2-line version of this chart, eventually, there we go. We're breaking above this volume node that we were kind of messing around with, and we've cleared through the top of it and near the top of the value area. So that's a good sign. If I take a look at some of these other oscillators, let's look at the DMI first. Obviously, you're going to see some breakout patterns on all these different indicators. Above 30, well above 30 on the positive indicator, below 20 on the negative. So your ADX is already above 25 and rising. So we already have a good trend. It looks like we're getting a breakout to a new leg on that trend, hopefully. RSI is above 60, well above 60. The CCI is well above 100 there. So that's a good move. The Ichimoku cloud, you can see we already had intermediate strength trend, and now we're breaking almost out to a mature trend level. So that's a good sign. And of course, not surprisingly, with today's move, we're breaking above the upper band and the upper Keltner channel. So good breakout after the bandwidth itself hit a new 150-day low. So we had a really big squeeze play, kind of like an ascending type triangle here, and then boom, breakout to the upside with new momentum. So I like that setup for a bullish trade. So what we decided to do was to sell the low 20 delta, buy 1 strike away, and position size like we always do for I don't know why we're beta weighted here. Let's get out of the beta weighted. Position size for that normal $500 of risk, get us a 3-to-1 reward to risk ratio. Little flexibility there on the timing of the trade, so we'll keep our eyes on that, and that's our trade idea for today. Well, that does it for today. This was the free Friday preview or full version of our market outlook video. This full version is what our subscribers at Market Scholars get every day of the week, including the trade idea, including the Market Outlook Live, including the Market Outlook Live trade tracker, where we manage and track all these trades that we do on the market outlooks. So we do 1 a day, so 5 a week, 1 a day. We keep track of, we manage them and track all of them. So this is what you get access to. So if you would like to continue to get access to this, sign up for our foundation tier with the link down in the description or the pinned comment down below. $29 a month, or you get 2 months for free if you sign up for the yearly version at $299 a year. Thank you very much for watching. We really appreciate it. Remember to subscribe to our YouTube channel so you get notified when these preview videos are posted. Like the video, comment on them, share it with anybody else so that they can see it. You can also read through the blog post to get more details on what happened today, what's significant, what really matters. The link to that is down in the description below as well. You have to be a basic subscriber to our site, but that's free, and you can be able to read through the blog post there. Again, thank you for follow me on Twitter, follow me on Facebook, all the social media, like our content on that. Have a great rest of your weekend, everybody, and we'll see you all tomorrow.